Hey everyone, thanks for checking out this video. My name is Travis. I'm the creator of the Master the Market education that you can find linked below in the description. And this video is going to be going over day trading risk management strategies. So first and foremost, the number one rule when it comes to trading and investing in stocks is going to be managing your risk and cutting losses when the time comes to do so. Without proper risk management, you can trade with 95% accuracy, or actually even higher than 95% accuracy, and you can still be a not profitable trader if your losses are still outweighing your profits. So by the end of this video, you'll be able to enter into your trades with a clear mind and a defined level of risk. So just to kind of show you the importance of managing risk and cutting losses in the market, if we take these examples here and let's say that you took 5 trades, and out of those 5 trades, 4 of them were profitable, that's going to be an 80% accuracy in your trading. And if you were trading with a 1-to-1 reward to risk ratio, meaning that every time you made a profit, you made $100, and every time you lost $100 as well, that would give you a total of $300 in profits over the 5 trades, because you would have 4 winning trades for $400, and then you would have the 1 losing trade that subtracts $100 from your $400. Now, believe it or not, you can actually have the same return, $300 overall, even with half the accuracy. So again, if you took 5 trades, but this time only 2 out of 5 of the trades were profitable, and you were trading with a 3-to-1 reward to risk ratio, meaning that every time you made a profit, it was $300, and every time you lost, it was $100 still, that's going to be again an overall total of $300. So that just goes to show you that keeping your losses small can really be much more important even than your accuracy in the market when it comes to overall profitability and long-term success with your trading or investing. So that of course leads us to the question, how do you find the level to actually manage your risk? And in my opinion, the best way to do this is by using some simple technical analysis. You can use technical analysis to find a risk level, and this risk level is of course where you're going to cut losses if the trade happens to move against you. And to get into this, you need to know some basic technical analysis. So for example, a level of support is a price level where a stock historically has a difficult time breaking below due to stronger buying or demand than selling or supply. Now, if a stock does happen to break below a major level of support, it's more likely to go lower until new support is formed. So for that reason, a support level is often used as a risk level, because if it does break below that support level, you want to cut your losses before it continues lower to keep your losses small and to avoid holding through a strong pullback. And just to kind of visualize what we talked about in the last slide, here's a diagram here of what a level of support may look like on your charts. You can see that it's often just a flat horizontal line where the stock seems to bounce off of multiple times. Many times that is going to be a great indicator to buy into the stock, but like anything in the market, it's not going to work 100% of the time. So if it does happen to break below that support level, you would of course want to sell and cut your losses to manage your risk. And the same is going to be true with a level of trendline support. You still want to use that to probably buy into the stock, and you still also want to use that as your risk level to cut losses if the stock breaks below your trendline support. Now, one very important factor when it comes to support and resistance in doing any kind of basic technical analysis is that there are often what are known as false breakouts in the market. So I've talked about false breakouts in a past video talking about buying breakouts in the stock a safe way and avoiding buying into false breakouts. But you also have to pay attention to false breakdowns in the market, especially when you're managing risk and especially when you're looking to cut losses below a level of support. So with that being said, a false breakdown is simply a short-term temporary break below a level of support before the stock rebounds and goes higher. So of course, when this happens, you don't want to sell into a false breakdown, because that's going to end up causing you to sell at the bottom before the stock bounces back up. And as always, you want to buy low and sell high in the market. So one of the main ways that you can avoid selling into these fake outs is by leaving some quote-unquote wiggle room below your support risk level. And just to give you an idea of what this often looks like when you do see a false breakdown below support, you're going to again see a level of support that the stock seems to be holding up above. Then once the false breakout happens, it's going to briefly break below that support level, causing a lot of inexperienced traders to sell and to cut losses on their trades, and then it's going to quickly come back up above support and end up running higher. So again, to avoid getting stopped out and cutting losses on this false breakdown, you want to leave some room below that support level instead of placing your stop loss, or instead of having your risk level just below support. And obviously that's going to lead to the question, how much wiggle room do you leave below your support in order to reduce your risk and still keep from getting yourself stopped out? And really that's going to depend a lot on the individual stock's volatility. So a stock with high volatility, meaning that it's moving all over the place with a large intraday range, is most likely going to need more wiggle room below support to avoid you from getting stopped out on a false breakdown. However, a stock with lower volatility and a smaller intraday range is probably going to need less wiggle room below support to safely manage your risk. So if we compare the two examples here, we have on the left side the stock XTNT, and both of these are the 1-day, 1-minute chart. So each of these candles is representing 1 minute of price action, but we're looking over the span of an entire day. And then over here on the right, we have the same, but we have TRVN. And if you compare the ranges for these stocks throughout the entire day, we have the low over here on XTNT as about $1.10, and high all the way up at $2.87. So it has a huge intraday range and a lot of volatility. Over here with TRVN, we have a low of about $3, and we have a high up here of about $3.55, so a much smaller range and much less volatility in this stock. And with that being said, when you're analyzing a stock and you're trying to determine where you should put your risk level, again, the volatility of the individual stock is going to play a big role. And over here with XTNT, because there is much more volatility, you're going to need a little bit more wiggle room below your support level to avoid from getting stopped out on a false breakdown below support. Now, to take things a step further, you can actually use your maximum risk level to determine what your maximum position size should be. And in this case, by doing this, you're going to know exactly how much you stand to lose if the trade moves against you. So for example, after doing some technical analysis, you determine that your risk level is going to be about 5% away from where you're going to buy the stock at, and the most you're willing to lose on the trade is $100. Your maximum position size in that case should be 2,000 shares. Anything more than 2,000 shares is going to cause a larger loss than you want to take on the trade, even if your risk level stays the same at just 5%. So anyway, that is going to cover the basics of managing risk in the market and cutting losses quickly on your trades. I hope this helped, and thank you for watching. If you enjoyed, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and lessons. And as always, if you want to take your education a little bit further and you want to learn about day trading, swing trading, and long-term investing, as well as have access to our exclusive market resources and our trading chat room with over 1,000 active traders, you can find all of that at my website, Master the Market, which will be the first link down below in the description. But thanks again for watching. I hope you enjoyed, and good luck with your trading.